Okay. Um, and whoever else joins later, that's fine. If anybody else that can't join, it is what it is, you know? Okay, cool. So, um, and Sal, just feel free to take yourself off. Just let me give a quick, understanding of when we talk about we practice what we preach. First off, when we talk about finding plays, yes, can you run scans and stuff? Absolutely, you can. I'm not saying don't run scans. I'm not saying don't do none of that. But for us, let's say you didn't have those scans, right? Let's say you're not a strat trader or whatever. The biggest thing to do is start off broad, follow where the money is going, right? We all know that the money flows into different sectors depending on different times of the year, right? Or every month or every quarter or whatever, right? The money is always flowing. It never goes away. It just is always flowing into different sectors. So this is the reason why we start off looking at sectors first. So for example, excuse me, here we have XLC. Now, again, I'm only going to start off looking at the weekly and the daily. And the reason why I'm doing that is because I know we have some big data for next week. And then obviously this week is also closing as well, too, right? And excuse me, the end of the month is also closing. So for those of you that are following Tensho alerts, I'm not necessarily looking for a big swing. I think it's wise not to do it until after like CPI and all that stuff. You know what I'm saying? Kind of see like how the market reacts to that information. Okay. But here we have XLC. And again, Sal, you can jump in whenever you want. All right. Here we have XLC. And what are we looking at on the weekly, right? We're looking at and we're seeing not quite all-time highs, but we see that a previous high was made over here. And since that point, we've kind of wicked in that area, showing signs of exhaustion since that point, right? As you can see, the two tried to get up that high, couldn't really clear not only that previous high, but also this candle's high as well, too. Basically kissed it, and then you see the inside candle kind of doing the same thing on the weekly, right? So the fact that we're struggling to get back above the highs to sweep at the very least, sweep liquidity, and I'm seeing on a shortened week, we've just gotten past Wednesday. I know we have 2 days left. On a shortened week, we're also struggling to get past this previous high, excuse me, the high of this candle as well, too. This is telling me that, okay, maybe we might have some resistance up there and it might be time to short, right? Possibly, okay? Now, what I'm going to do is then,
Now, hold up. Now, what you do, you wait for that setup. You do not rush in that setup. You do not try to be the first one in that setup unless you can scalp and don't have a taking profit problem. And that's what a lot of traders, what I see, including in this Discord and on the social media, they have a problem with taking profit. If you get 20, 30%, by all means, take your profit. When y'all see me in these QQQ trades, yeah, I'm making 1,000, 2,000, etc. But I'm taking my profit. I'm not gonna let that shit sit unless it's like on a Thursday or Friday, something like that. Thursdays or Fridays, that'd be either this shit gonna sell off a whole lot or it's gonna go to that price target. you
agreed,
know,
right?
now I'll say this here. So me personally, I'm looking at Melda, and this came from Tensho telling me that, hey, look at XLC. It has a
So,
rejection block. So I
right,
automatically know what he's talking about. So I'm like,
right.
bet, now let's find a ticker. And this is literally how we find our plays. Day in, day out, from swings, day trades, scalps, etc. If y'all go in that bot chat, y'all see exactly y'all can see exactly what I'm searching for. Which are double inside days, Nirvana days, and Holy Grail days. I do like the 2-2 rails, but they just haven't been playing out so far. It's not to say I don't like them. It's just that because I can play any strat, you know, um, setup. I like the hammers on the 1 day, the daily, 2 day, 3 day, and the weekend stuff like that too. You do not rush into plays. You have to be a patient sniper, and this comes from. I'll say this here: I was a pretty decent trader already, in my opinion. Yeah, I had hit Nvidia, but I still feel like it's certain things that I got to work on myself better as a trader, and that's what ICT brought me. Notice I'm making less trade, but more money in some aspects. Yeah, I haven't sized up a lot, but I'm averaging, $1,000 to $3,000 a day. If a man or woman can't survive on that, and you add that all in a week, that individual has a problem, a gambling problem, or something that's going on in their life, or they living too much above their means. Now you do this according to what your portfolio allow you to do. You do not ever size heavy, not ever. If you are risking too much and people get antsy when they risk too much and oh damn, or they'll stay in a play or damn, I need 100% or whatever. That means that individual is sizing too large in them plays. You have to build yourself up to get to be able to risk certain amounts of stuff. You have to earn the right to get up to 5, 10, 15, 20 contracts, etc. or whatever. Don't rush the process. Just trust this shit. Like,
Agreed.
if you go through all these steps, you're going to be right where you want to be at. And even if you hit you a 10, 15, $20,000 day, if you haven't been playing with that size already, do not go out and buy, 40, 50, 100 contracts. You going to hurt yourself because you are not used to playing with that particular size.
Agreed. So what we seen, like what Sal was talking about, right? Like looking at the sector, right? So we seen that rejection block on the daily. And since that point, right, what do we see that happens after that rejection block gets created? This 3 couldn't get into it. We tried again, second attempt, couldn't get into it. The 2 up, tried again, second attempt, third attempt, excuse me, couldn't get into it. Remember, I also talked about the 3 1s, the holy grails, how they flip into, again, 3 2s, only for it to get that manipulation to the upside, only for it to reverse back to the downside. Now, I know that this too is a bullish too, right? So obviously price could potentially still continue to go up. But with the way that the setup is, the fact that this is acting as pure resistance right now, again, that's when your mind should be like, okay, so the sector looks like this. Now, what are some tickers inside of the sector that may have something similar to that? Let me clear this out real quick, right? So as Sal said, we're looking at Meta, and when you're looking at it, right, again, not the same similar setup, but you're seeing that the highs, right, price is trying to come up, couldn't really get back to these highs up here. Also, a high is made here on the weekly 2 weeks ago here, and you can see price has not been able to get back above that high as well too. Essentially, what you're seeing is after the drop, we fall back into this fair value gap only to bounce up. But again, you're starting to see potentially
Notice
some.
that Notice that fair value gap too, and this is where y'all gonna understand that all fair value gaps are not created equally. Now, a lot of y'all gonna look at it and be like, "But damn, you got that fair value gap right there." Don't even worry about that. Just it if that shit trigger, if that shit goes under that, what that was I said.
You said
That four set,
473.
if that shit go under 473, that shit gonna make about a $5 or $6 drop.
Right. And then I also wanted to point out, Sal had pointed out the FBG, but remember I talked about how like previous lows that get broken, and when price comes back to try to visit, it may act as resistance. So look at this previous low that got broken by this 2 candle to the downside. And what is price trying to do? Essentially, price is trying to revisit. So what we're seeing here is the break to the downside, price is coming back to visit. And if it's going to follow the way that we think it's going to follow, then you're eventually going to see that. And essentially, that's kind of this is what I've learned from T Trades as well as from Casper when he talks about the fair value gaps and how to play them. Now, I know we're not using specifically a fair value gap, but he also talks about these previous swing lows and swing highs. He calls them inflection points, right? So this inflection point is coming back to be tested on the week, and so far it's being rejected, right? Hence the reason why we're ending up with so far again a shooter. Now I know we have 2 days left in the week, but you get what I'm saying. So if Thursday and Friday end up being bullish, this ends up being a shooter candle on the week, which ends up potentially with the 122 rev strat possibility, right? And then if you look at the daily, not only again that inflection point is there, but this is where you combine confluences together, and you'll see that not only do we have an inflection point that price is having a problem with, but this is also this area right here. I have an indicator that shows me breaker blocks. Totally gonna admit I'm not 100% on breaker blocks. So yes, I do need training wheels. I'm not embarrassed to admit that.
Them breaker blocks, me myself personally, I like them a whole lot better than the order blocks. Especially like if you watching QQQ on NQ and this other tickers, Nvidia always they breaker blocks always come true to form. You know, those broad information too on
Right.
Nvidia.
And just, I'm sorry.
Now I'll say, now you good. I'll say this here too though. So this would be our what we call our bias, but that doesn't mean this is going to happen exactly to its form, whatever.
Exactly.
I mean,
Exactly.
in the morning they could pump the hell out this shit.
Exactly.
But also always know too though, a lot of times that first move is the manipulation move.
Yep.
Y'all notice we've been talking a lot about manipulation moves, distribution legs, and I'm gonna say accumulation. Anytime we say accumulation, we talking about chop.
Or for my strat traders, consolidation.
Yeah.
Okay. So just a quick explanation on what breaker blocks are.
Now, hold up. Before I'll say this here too though. So what I got in this morning, that Tesla trade, there was an absolute scalp. But you have to be quick as a cat with that motherfucking move. Because if you stand it, your ass gonna get ate up. If you looking on a, I'm gonna say 15, 20-minute chart, 30-minute chart, that move will not happen. You gotta be looking on the 3-minute and the 5-minute. And that's something that, Tesla is something I look at every day, the Ferrari list and stuff like that. And I
Would you
knew
grab the
exactly what
180s?
it's gonna do. No, I got the 170. I should have got the 180s.
Okay. Okay. So yeah. So a quick explanation on breaker blocks. A breaker block is essentially an order block that gets mitigated, right? So this is an order block, right? This red candle here, and then you see how the green candle displaces above it, symbolizing a bullish order block, right? So essentially, I'm just going to draw the pattern so you can kind of commit this to memory. Let me actually make this smaller. Yeah, there we go. Okay. So you have an order block, a bullish order block, which price is supposed to continue up on, which is exactly what happened, right? Bullish order block, price continues up, pushes up. Now, the order block then gets mitigated when price comes back down through it, right? Trades right back down through it. And now where it becomes a breaker block is when price comes back to retest it, it should then act as resistance and price should continue down, making a lower low from this low here. That
No,
is,
hold up.
go ahead.
Notice that pattern that he is drawing too. If you look at any ICT charts or graphs or whatever you want to call them, that's an absolute. I forgot exactly what you call that one, but it's one of those. Like seriously,
He draws it honestly on different theories. He draws it on the mitigation block theory. He draws it with fair value gaps, and he talks about not being the first one in. And this is exactly what he means because yeah, could you technically have taken? I mean, I know this is a gap down, but could you have technically?
You know what else you could use with that too? Them fields.
That too, yeah. As a matter of fact, I was gonna say like Biker's Fibs, where he talks. Well, I say Biker's Fibs because he taught me about fibs, but that it really I use that as an added confluence to what I'm seeing ICT wise. So when I see that price is trading back into a breaker block, as well as from what Casper teaches about inflection points, which again we saw on the weekly. Obviously, we see it on the daily, but we see it more clearly on the weekly. And then look at how we close today. Not exactly a shooter, but let's be real, that's a lot of exhaustion, right? So, yes, could we push up tomorrow? Absolutely. But if it were me, and if I were a betting man, I would say we push up to take out the high of this too, sweep liquidity, only to come back down, which honestly is not a bad thing considering that you'll probably get a better entry up here. But like Sal said, Do you understand how we are shaping the bias without being married to it, right? Because we understand that the market is a living, breathing thing. It can change its mind at any given point, right? Buyers could step in and say, F this, we're going to run it up. You get what I'm saying? Or some news can come out, we're going to run it up. Meta could say something, Zuckerberg could, come out and say something, we're going to run it up. But this is how we form that bias. What's the difference between breaker blocks and order blocks? Okay, so again, a breaker block is an order block that is mitigated, and then price will come back to retest it, right? Only to use it as resistance. So here, this is a bullish order block. So technically with bullish order blocks, it should be used as support, right? So once we get above that order block, right, it was kind of used as support a little bit. We kind of pushed off and pushed up out of an order block. But when it turns into a breaker block is when price trades back through it, right? And then comes back to retest it in order to trade back up. But it finds this as resistance now as opposed to support, and therefore bounces and continues heading down. That's a breaker block. It just in the simplest way that I'm probably not explaining it in the best way, but to me, in my mind, the way I connect the dots, a breaker block is nothing but an order block that has been mitigated. And now it's basically flip sides, right? What once used to be a bullish order block essentially is now a trader and is now using the same order block as resistance against price, right? Clearly, you can see that here because now you're seeing resistance and a pullback, and again, resistance again, and potentially another pullback. So again, could we have taken the first move? Absolutely. But now that we have the second move kind of doing the same thing, now we can feel a little bit more confident that if we do trigger to the downside, and I'm saying this without knowing where Meta is, but if we do trigger to the downside below 473.70, then we might be able to fall all the way back down to this fair value gap over here at 453.34, right? Now, you want to set targets along the way, obviously, so you have a low right here at 461.54. So if it were me and I could afford it, I'm probably looking at either the 470 puts or I'm looking at the 465 puts, so that if it does hit that first target of 461, good. If it continues to fall even more, even better. Does that make sense?
Now the strike he getting, that's a great risk reward type of trade. That way, if it goes against you, you haven't lost a lot of money. Now, me myself personally, y'all know I like to play my shit in the money or at the money or whatever.
Right.
So that gives you, I'm gonna say, different perspectives to look at. Now, if you have a small portfolio, I absolutely, don't recommend you playing it the way I play it. I want more money with my shit, and I can, of course, absorb the loss. If you have a small portfolio, do not do this. Now, I'll say this here too. On those plays like AAL, that's a play you should have absolutely grabbed every bit of 10 to 20 contracts. It's like, and if you got a portfolio over, I'm going to say 10, 15,000, you should have loaded the fucking boat. Because that flow came out too. Now, I know I didn't put it in the group, but when that flow came out, I sent it to Tensho. And I say, shit,
I
you
put it
got
in
you
the
one,
group.
boss.
I put it
all right.
in the main chat.
Yeah.
I did.
I mean,
I put it in the main chat.
I know I don't be putting it in the Discord, and I stopped doing it for a reason, because when I put the flow out, people tend to, more or less get in the plays without even looking at the charts. And that's just going, or considered a call out. And people just gonna get ate up that way. So rather risk people from taking them type of losses, I'd rather not do it.
Got you. So yeah, if Meta triggers to the downside tomorrow, then yeah, we know what to do. Also, again, if you can't afford, let's say Meta, I don't know, it was just too expensive, right? You can also look at other tickers inside of the same sector. Now, it may not have the same, again, It may not have the same exact set. Oh, damn. Wow, we really should have caught this a long time ago. Good Lord. Damn. That would have been a swing, boy. 115 all the way down to one. Oh my God. Lord have mercy. Okay. So yeah, on the weekly for Disney, right? You get a shooter. You still may be able to get some of this move, to be honest with you, because it hasn't really hit the next fair value gap. But you get a weekly, you get a shooter on the weekly so far, which is an actionable signal. And again, you can take a look at the daily. So with the daily, we have a breaker block up here, but more importantly, what are we seeing here? We're seeing, let me clear up some of this stuff so that it's a little bit cleaner, right? 1 second. We are going to take out the rejection block. All right, cool. So here, what are we seeing? We're seeing a fair value gap, right? And then right below that fair value gap is a previous high that hasn't been mitigated yet, right? So if price were to, let's say we're bullish tomorrow, as actually, to be honest with you, I'm really checking out this low right here more so than, because this is an inflection point, right? So if we trade back up into, let's say 102.52, and we start exhausting around the same area that this two up exhausted, then we can, again, don't jump in early, but through bias, we can be like, okay, well, looks like we might have an entry here, okay? Or if it's going to continue down, because we did get a 1-2-2 rev strat, which is a strat combo. So if we get that two down at 100, then what I would probably do is target either this low here at 96.64. If you want to do like Sal and get like at the money, you can probably get the 100 puts. And then if it gets down to 96, even better. Or you can target 95, right? If it were me, these are the two targets I'm going after. Now, I know there's a low here, right? But obviously you're not going to target that, right? So you would target the 96 or the 95, or excuse me, if you're going to get the 100, your targets are going to be the 96 and 95. Or if you want to go a little bit further out the money, 95 put is what you would go after, right? You'll probably get it a week out because this ticker has an ATR of $2. Okay, so obviously you could do that in the next 2 days, but obviously you don't want to, you don't want to screw yourself on time here. You feel me? So 95, 96. And the reason why I'm focusing on these two, because the next area of support is down here by this bullish breaker block. And I mean, actually, I really wouldn't count because it's so slim. I really wouldn't count this fair value gap. But the next potential area of support is by this breaker block. So what I would want to do is get the 100 or 95 put, and if it travels all the way down here, cool. I'm probably going to get out of the trade at that point, right? I might start trimming at 96, and then by the time we get to the breaker block, I'm either leaving, very minimal amount of cons, or I'm out of the trade entirely. I don't care if it continues further south. The point is for you to just make your money. You don't have to hit them home runs on every single time. Let me pause here because I see something in the chat. What are signs that a trade is ready for entry versus too early? So signs that trade is ready, for me, I use the strat entries. So technically, if you would have entered during this two up, that's too early. But if you would have used the low of this two up, and then when this two crosses down below it, that entry you can take. You get what I'm saying? You can wait to see if it's going to respect it, but that entry you can take. All right. Jumping in too early, it would be like what we saw on Meta, where, okay, for example, on the daily, oh yeah, we got a shooter, right? It would be like, for example, if let's say the market was still open right now, oh yeah, we got a shooter, let me enter now, right? But you never got that confirmation of the 2-2 continuation heading down, only for price to reject, right? Because there's a previous high here, it might reject and continue up. You get what I'm saying? So that would be a little bit too early. You feel me? But honestly, I really like this setup on Meta, so I'm probably going to target that. I'm probably going to target that in the Qs. But you get my point, right? From beginning to end, start off broad by looking at the sector. What led us to Meta and Disney, as an example? It was looking at the sectors, because the sectors are going to tell you where the money is flowing and where the money is flowing out of, right? Where's the selling happening? Where's the buying happening? It's the reason why, for those of you that follow Strat Soldier, why he does the weekend shift and look at sectors, right? He's seeing where the money is flowing and where the he's seeing where the buyers are and he's seeing where the sellers are. Okay, and as long as you know where they are, there's always going to be a money making opportunity. Does that make sense? All right, I'm gonna take just a quick question. Is Stock Mom 412 on here by chance? No? Okay. All right, no. I'll answer the demon then. Do I have a recorded? Oh shit, I probably do, but damn, Leon, you're gonna make me go back in the archives, bro. I
What you mean a
probably
record? What do you mean a recorded class on the sectors?
like I know I did, like basically like breaking down, like looking at the different sectors. On my, so I used to do on my YouTube, what did I label them? Weekly sector review, right? Where I would look at,
All he gotta do is get the list of the sectors, and I could drop that up in the chat and
yeah,
then chart them out.
right.
Chart them out like a
That's
regular
that,
ticker.
that's really all we're doing. But each week on Sundays, this is what I do. Um, I'll look at,
I'm about to drop it in the beginner chat.
all right, cool, perfect. Right? So this is the thing, these are the things that you look at, right? Like I pretty much have the sectors memorized, right? XLB materials, yeah? So we look at materials, we'll see what's going on. I usually start off on the week, right? Week, we traded right back into a bullish breaker block. So doesn't mean automatically that we're gonna bounce, right? It doesn't mean that, but there is potential there, right? Why? Because we're in a weekly breaker block and there's a lot of fair value gaps, bullish ones at that, that price could bounce off of. Not to mention, this is a retracement from a run up, right? So maybe we fall back down into, equilibrium before bouncing off of that, like what we did over here. It fell back down just shortly above equilibrium and then it bounced up. So maybe this time it might fall back down to, let's say, the 0.618 level, or maybe just above, because there's a fair value gap there as well too. Do you see how I'm combining two different things together to kind of strengthen what I'm seeing? I'm combining confluences together, right? I hope that makes sense. Yeah. So looking at that on the weekly, and then also when I zoom in on the daily, what do I see here? I see price is literally sitting on top of a fair value gap. We might potentially bounce there. Or again, price can fall back down to this daily breaker block, maybe sweep the lows and maybe touch probably the halfway point of the breaker block where these fair value gaps are sitting. This is what I do to set up swings, right? With swing trading, it's not the immediate instant gratification that you're looking for. These are like, it's chess essentially, right? In chess, you don't just take the queen and go straight to the king and knock him out. No, you got to set it up and kill him in the next three moves, trap him. And you know what I'm saying? So this might take a little bit to set up, but it's something that you should make a mental note of. Maybe set an alert where if price crosses, let me do it, right? Hit the alert, and then I'll put like if price crosses above, not down, above, right? Because the assumption is I want to catch it on its way back up. So if it crosses down, I don't need to know about that. I might get too excited and jump in early. You get what I'm saying? But I'll set an alert that it's crossing up. So when it does reverse or bounce off these fair value gaps and sweeps liquidity and starts crossing up, then I can get that alert for XLB, and then I can start looking at tickers or trade the sector itself, because don't think that you can't trade these tickers itself. So I'm going to label that XLB bullish swing. And then I'm going to, I usually just double it up, boom, and boom, like that, create, right? So now I can move away from it. I'm done with it. Now I can move on to XLC. But if it does trigger that scenario, then now I know I could look back at the chart and say, oh, okay, yeah, definitely. It came down to support, it's bouncing. Let me look at, I don't know, NUE or what's another, NEM, FCX in materials. You also want to start committing to memory at least 2 to 3 tickers in the sector, so you know instantly what to go to. You know what I'm saying? Google got an inside day in XLC as well, still inside week though. And not ready to touch that yet. If we got inside day and inside week, not ready to touch that just yet. I want to see what happens after the inside day. We'll see what happens there. But that's the point, right? So XLC, what would be next? XLE. And that just, again, wash, rinse, and repeat, right? You look at it. So XLE, for example, is trading, it has traded back into a bullish breaker block. I'm gonna go ahead and let me do the fibs real quick. I just want to see something. Right? We just kissed below the on the weekly, we kissed below the equilibrium and then kind of bounced out of that, which just so happens to be where a bullish fair value gap is as well too. So this doesn't mean that we're going to get an immediate reversal, but it might have found some support in this fair value gap. Ideally, what I would really want is I would want price to close above this inflection point, right? In order for me to feel like, okay, maybe the bulls definitely stepped in. And also for me to feel like, okay, now we set up for a 3-2-2 rev strat back to the upside. Now on the daily, right? Again, what did price do? Price traded back into the fair value gap, but more importantly, price took out these lows over here. You with? I'm sorry? Oh, I thought somebody was saying something. So from a strat perspective, we took out the lows, and assuming that we bounce off of that, now we have the bottom of a broadening formation. Now we're at the bottom of a range. Now we get potential reversal back to the upside. And again, we're not anticipating that it's going to happen immediately, but now, again, you see how I'm forming the bias in my head. So what you can probably do is set an alert. If price starts going back up past this inflection point, then you can set that alert, right? All right, cool beans. So XLE, what else we got? I'm not really going to go over every single sector, but like XLF, let's see what we got working on XLF.
Man, you know what you missed though?
What's up?
Fucking XLR.
XLI. Puts probably. Ooh,
Yep.
fuck. Yeah, we missed it. God damn it. Yeah, that inside. Yep, inside. This could have been a swing too. Taking the inside when it broke to the downside on the inside. Yep. Crazy. That would have been an amazing swing. And honestly, price is probably going to come down to try to take out these lows down here. And then probably bounce off this fair value gap, honestly. But damn. Yeah, definite miss, because this would have been a perfect swing up at the 124, and you probably could have targeted the 120s. And if you get a real serious bearish drop, I mean, price could probably even come back all the way down to this previous high over here at 114. Because as you can see, the only like real thick fair value gap is this one. All the others, very slim. Price might just blow through those just for the hell of it, and potentially end all the way down here at 109. You know what I'm saying? All right. As far as, plays for the end of the week, I don't really have any swings. I kind of want to see how this week closes, and I know we have FOMC and CPI, I think, next week. if I'm not mistaken. So I don't really have play. I really want to sit back and kind of see what's happening. So if anything, just keeping it a stack. I'm probably only looking at the cues. I'm really probably either just managing my positions, or I'm probably just going to be looking at the cues, SPY, or meta, just because of the setup. That's about it. Everything else right now, especially with the way like today kind of chopped, I'm really not. I really wouldn't be surprised if something like that happened again tomorrow. Um, and then Friday, again, the repositioning of the options will probably happen, and yeah, we'll probably have a little bit of a sell-off or something like that. But as far as like going into I don't want to go into like a month-long swing on something when I know, again, CPI and FOMC could change any of that. And then also I know we have PCE on Friday as well too, so I'm hesitant to enter a swing, and PCE could change all of that. So I know y'all probably looking for like the next player or whatever, but sometimes patience is the play. Damn, look at DIA. Oh, it's Bama. What's up, Bama? Let me see, DIA. Yeah, even DIA wants to drop. Probably, honestly, probably wants to take out these lows down here at 376. Especially like, and if it does like try to trade back up, I would definitely pay attention to this fair value gap, because it may trade back up into the fair value gap. Oh shit, am I not doing it? Here we go. Into the fair value gap, only to reject and continue further down to take out these lows. Remember, price is essentially doing one of two things. It's either trading to external range liquidity, or it's trading to internal range liquidity. So we did get external, right? It traded up, right? Took out the highs, and now price may be trading back into an internal range liquidity, which will be these fair value gaps down here, right? And again, it is on an uptrend, yes, but obviously what goes up must come down. And honestly, this would just be a healthy pullback for them again to get back into longs for the low. It's pointless for them to get in longs up here because it's expensive. We're at premium. But if we can get below premium and get those longs down here, yeah, that's exactly what the algos are wanting to do. All right. So yeah, this was meant to be a really quick video. Just to kind of like let y'all know where we're at, what we're thinking. And again, I know a lot of y'all looking for the rah home runs, but
Yo, excuse me.
what's up? Okay, guess not. No? Okay. So yeah, I know that's what you're looking for, but sometimes cash is a position. You know what I'm saying? The point is to play defense. So if I see something really, really great, I'll alert it in Tensho alerts. But for right now, I'm just sitting tight, right? I got some pretty sizable buying power. I closed a lot of positions today. Other than that, I'm majority inputs. I think I'm still in the inputs for the Qs, and I'm still letting that American Airlines runner do its thing. But other than that, I'm not really looking to go into any swings or anything like that. Let's see how the week closes out, and then yeah, we'll see what happens after CPI and how the Fed want to react to that, and then we'll start looking at some potential swings and go from there. Now, my theory, my bias, which I'm not married to, is this. I don't think this is the real sell-off just yet, in my opinion. I'm seeing where price is struggling to break through levels of support, fair value gaps. So I think that this is like what Sal said. I think this is the manipulation phase to distribute back up to take out the highs, only to then finally drop down. Right. And I think it's going to happen in before the end of the second quarter. I'm sorry, second quarter heading into the third quarter. And then I think by the end of the third quarter heading into the fourth, I think that's when we'll see the bullishness once the elections really start ramping up. Okay. So if there's no questions, I'll post the recording for tonight a little bit later. I am not going to promise, but I'll try to do something tomorrow as well too, or possibly, well, no, I'm going to do it on Sunday, but I'll try to do something for tomorrow, maybe setting up for Friday, and then we'll go from there. In the meantime, yeah, chart, look at some sectors, look at how things are setting up, possibly for a potential day trade tomorrow. And yeah, we'll go from there. Pay attention to the daily, the 4-hour and the hour time frames, if not lower, and we'll go from there. All right, y'all? All right, love, peace, and chicken grease. Y'all have a good night. I'll post the recording once it's done converting.